question as we've got about 7.5 minutes left here. Jeff Kleintop joins me, Chief Global Investment Strategist at Charles Schwab, alongside Cooper Howard, Director and Fixed Income Strategist at the Schwab Center for Financial Research. Cooper, looking at bonds today, selling off in the middle of a stock sell-off. Should we be getting concerned?
I don't think that we really should be getting concerned at this point. I think that this is just a continuation of kind of what we've seen lately. And there's been a big move up in terms of yields all the way back to the latest Fed meeting. So I think that really this is just a continuation of that move, Oliver.
Okay. The fact that this has been all stemming from the cuts, it's making people scratch their head. But we were talking at the time that maybe those would just be stimulative enough to get this economy going. What do you think, Cooper?
I think that if you look at the overall health of the economy continues to hold up relatively okay. If you look at unemployment, that's about 4.1%. We continue to add jobs. Now, looking ahead to the next non-farm payroll report, expectations are only 135,000. So I think that that's going to be an important payroll report. Might be a little bit weaker than expected. If you also look at inflation, we think that inflation continues to trend down towards the 2% level. If you annualize out the most recent moves, we're pretty much there. So that looks relatively benign. So the economy continues to hold up okay in the face of these higher rates, Oliver.
I've come back a few times, Jeff, to our chart from earlier this week, yours about the economic surprise rate in the U.S. beating the rest of the world with this dollar on the run. It kind of seems like that's the chart of the week.
But it's not an earnings report. It's really this preliminary reading of the widely watched Purchasing Managers Index we get tomorrow. That's going to give us the latest reading on economic activity here in the U.S. In the fourth quarter as it gets underway for October, but also for the Eurozone, for France, Germany, Japan, the U.K., Canada. Analyst estimates are for double-digit earnings growth over the next 12 months. But the global manufacturing PMI, which does a great job of leading the trend in earnings estimates, suggests earnings may be set to slide. And Oliver, we've had better than expected economic data, as you and I talked about. But what we're seeing here is that the momentum in terms of this PMI is headed to the downside lately over the last few months. And earnings expectations have not been revised higher. I think we could go through the next couple of weeks and not see a lot of upward momentum to earnings here, and that can be disappointing when stocks are pricing in pretty lofty multiples, betting on a pretty rapid earnings growth next year.
Boy, so we kind of need some justification for some of these revisions. That means that PMI probably needs to come in strong. If not, there could be even further kind of volatility.
Right. That's the key. And so, that could also impact the outlook for what the Fed's going to do. Today we've got a 50 basis point rate cut from the Bank of Canada. That was a big step up. They've done 3 in a row prior to that, 25 basis points each. Now 50, maybe the 50 move by the Fed kind of gave them cover to do that. The PMI prices survey, which is a part of that PMI survey where they ask purchasing managers, what are you paying for inputs? That tends to give a good leading indicator where inflation's headed. And in Canada, it's headed lower. In fact, if we follow the Taylor rule, it would say that 50 basis points was entirely justified, and there's more to come in Canada. So we've got policy pointing in the right direction to re-stimulate some of these economies. We'll have to see if there's follow-through.
All right. As it continually impresses here and seems to disappoint elsewhere, despite them trying cuts much more aggressive around the world. Cooper, does that keep driving up the dollar? I mean, what's possible here if rates are on the climb again? What could we be thinking about for the greenback?
Yeah, so you have seen a little bit of a move up in the dollar, and I think that that's partly attributable to where we are with interest rates. So as interest rates have been moving up, Oliver, the dollar has been moving up. So you get that little bit of a spread differential. Now, our view on where rates could potentially go from here is I think a lot of the move up may be limited. So we think that there's probably not too much more on the side of upside surprises with yields, unless, of course, the economic data surprises to the upside. What I think's been happening lately, Oliver, in terms of the economy and the outlook for rates, is that overall the economy has been improving. It has been surprising, like you and Jeff have kind of discussed. If you look at that Citi Economic Surprise Index, overlay that with the 10-year Treasury, and I'll give you a little bit of shout out on your X handle. You did this, and you can clearly see that there's a pattern with one of the two, a pattern between the two. So I think so long as we continue to see economic data surprise to the upside, that would be the catalyst for further upside on the yields. But we think that probably further upside on yields seems to be a little bit limited here.
Not a lot this week that seems like it would be a huge catalyst. I guess we'll see jobless claims tomorrow, maybe sentiment of durables on Friday, but still pretty light on the calendar. Thanks for the shout out to the tweet, X. Cooper, real quick, the bond auction for the 20s today, do you think that added to this at all or anything else?
I don't put too much weight into it just because it's the 20-year. It kind of tends to be a little bit of an outlier in terms of the other on the run. So as it being the 20-year, I put a little bit low weight on it.
20-year, it's kind of the awkward one of the bunch. Jeff, give me a closing thought. China stock's been basically flat. If the U.S. comes under pressure, if our S&P rally cools off, you think people get more interested in maybe dabbling in a little China risk?
I think China's got to put a few more stimulus announcements on the calendar before before investors get re-excited in those equities. But that could come after November 5th. Should we see a Trump win? I think China's keeping a lot of dry powder in store if they would need to unleash that to drive their economy from a domestic perspective, given that export growth may be slower under a Trump presidency.
True. Okay. Kind of a point that Phil Strail overlap a little bit with the Morningstar guest at the top, like that connection. Thanks, Jeff, and thanks, Cooper. Appreciate that, guys.